Alright, welcome back everybody to the Simple Markets channel. My name is JB and today we are actually going over a subscriber's data. He sent this data to me. He reached out over Instagram. This is just a bit of our conversation here. I told him to add me on Discord. We can kind of look over his data. And yeah, basically he sent me 3 separate spreadsheets here. One of them being an older set of testing, another one being newer set, but he found himself in deeper drawdown, and then the last one being just his demo trading journal. I figured I would go over the data, talk a little bit about it, and more importantly, kind of walk you guys through my mindset and kind of the steps I take when going over data. But keep in mind, guys, he is just a subscriber or someone that follows us on Instagram. He's not in our community. Just like some of you watching, feel free to reach out. I can look over your data like this. I can kind of go through it and give my input. I'm even making a video for him now. I, of course, asked for permission. But before we dive into it, I always like to read, what is the specific issues or things that he mentions so I can get an idea before going into the spreadsheet what I should be looking for or expecting. But he mentioned he backtested so many pairs and years ago, and he said he has about 10 spreadsheets, 100 to 300 trades each, different pairs in 2024. So great repetitions, obviously very comfortable with the strategy. But he said, I found out my biggest issue is to decide whether a trade is too aggressive or too big of a range, when I should cancel an order. And most common issue is, for example, if there's a big break of structure that was caused due to a move of 2 smaller ranges, what range to take. So 3 different things that kind of came to his mind here when it came to issues about what to take as a trade. And he said it found sometimes a smaller, most recent break works and sometimes a bigger one works as well. So I would agree with this statement specifically, because one thing I want to mention, especially regarding the other points that you made, I do think these are a bit intricate and a bit discretionary. And like I said, I just opened these spreadsheet, guys. You're going to get my full start to finish of how my mindset works when going over data. This is going to be me completely live looking at spreadsheets for the first time. But one thing I will preface, and I always like to preface things before I go over data because it's very important, with 3 different things, especially as discretionary, for example, too big of a range, too aggressive, when to cancel orders, or types of break of structure depending on smaller, large ranges. These are very discretional topics, and I only find that people who dive into these minute details too much, it typically stems from over-testing and possibly having too much testing going on, because what this does is it leads people to kind of fall into this trap where they assume that win rate is the key, and instead of focusing on it as a probability standpoint of repetitions, they begin to focus on it as more of a standpoint of, okay, I took 1,000 trades on this spreadsheet in this session and I had really good data, but now let's make it better by cutting out a bunch of losing trades. And in order to cut out those trades, they may start looking at the more minor details, like how big of a range, how aggressive, when they should have canceled the orders. These types of details come typically after the fact of a good testing session. And just kind of coupling that with what he mentioned here, he had an older testing session, but then a second one where he found himself in deeper drawdown. And if I had to even guess, I would say that the demo journal is actually better data than both. And I'll briefly break down why, and then we'll hop into the journals. So the first reason being is, as I mentioned, people who first do a testing session may find themselves with pretty solid and strong data, especially on a new strategy. And of course, he is using the strategy that we have, the free one down below in the description, so feel free to download it if you'd like as well. But when people first test a strategy, they're kind of going to fall into this gray area. They may have some rougher data and it may take some time and practice to kind of improve. Or over time, once they begin getting to that point, they're going to reach almost like a peak in their data where they start seeing really good results. They get that euphoria stage of the strategy is perfect, everything's working well. And then instead of continuing to trade just like that and kind of taking that good data and using that as their benchmark, a lot of traders have this mindset that now that they've traded a bunch of sessions and it did really well, they need to now optimize. And this step of optimization, and I'm a perfectionist myself, I'm sure there's many out there like me, it almost throws traders off because it now teaches them that they need to choose A+ setups and they need to start cutting down trades based on very minute details. And they need to basically start cutting losers and increasing winners. I understand that it's a common mindset, especially as a trader. You want more and better and more and better data. But if something's working for you significantly over a large scale of trades, you're better off sticking with that data, because the more that you intend to optimize, you may find yourself in deeper drawdown. You may find yourself taking less repetitions. And overall, you're going to end up hurting your data. And not only that, but causing confusion to yourself. We actually have an entire section in our Discord completely based on this exact scenario I talked about. I think the section is labeled something along the lines of the cycle of over-optimization, and it essentially means for those traders that can't really take a good set of data from face value and work with it, they end up going and kind of working to optimize and more testing, and it leads themselves to not only more confusion, but worse data. And just very briefly, some of the things that I can recommend. Number one, take that break from backtesting and hop onto demo. And this is one of the reasons I mentioned I bet you his demo data looks great, is because I find these kinds of traders that do this type of over-optimization, they take the break from backtesting, let themselves kind of have a breather from so many repetitions and so many charts, and then just focus on demo trading, and they actually do fairly well. We have another trader in our community who kind of fell into the same exact category, and about last week or the week before, same thing. I actually recommended, hey, maybe take a break from over testing. I feel like you're confusing yourself a little bit here with a lot of discretionary topics. And my recommendation was, why don't you give that evaluation that you have a shot and see how it goes? And after that advice there, he ended up being just about our 50th, let me drag this open a little bit, but our 50th funded member here. So we are at a ridiculous funded member ratio here, over, I want to say 35%. Honestly, I can't do the math right now in my head, but obviously kind of the way we teach and the very one-on-one approach we take with people, I think works very well. And we can kind of see it here from the amount of funded members to members ratio. And I kind of see right away that you may fall into this category. So my recommendation, before going too deep into the data, focus a little bit more on that demo, get that practice in, and maybe ease up on the backtesting, because it will allow you to kind of move back from that overwhelming nature of, 100, 300 different trades on 10 different spreadsheets. It's a lot of repetitions, a lot of confusion. And at the end of the day, looking at candlesticks for too long can get very confusing. But without further ado here, let's hop right into some of his data. So this here is the first spreadsheet. Now, very, very clearly right away, one of the first things I look for is an equity curve. And we could see this very clear, very consistent equity curve and super bullish. This data, as I kind of mentioned, is expected to be very, very good, because what he seemed to focus on here was likely that first testing session and just getting initially used to the plan. We can see a good disbursement of wins and losses. He even tested break even versus no break even and how it would have panned out for him. As you can see here, without break even, he did make significantly less risk to reward in the year, it looks like, compared to using break even, which is kind of similar to, what I've talked about in my past videos with my own journal. Now, as someone who reviews a ridiculous amount of data for my students and spreadsheets, first thing that I will always look for is the equity curve, because I think it's a visualization of how the data actually looks, which, as I mentioned, it looks great. I then put my attention towards the win rate and the total number of trades. So win rate being just under 60% with break even, 58% to 60% in that general range with break even is a common value we see with students. So I think we're in a great place there. And also 29% with 3 risk to reward is a fantastic win rate as well. And if I go ahead here, and this is one of the next things I typically do, I remove that 0 there and then just look at the win rate, and this is absolutely fantastic. 34% is kind of a level that we try to get students up to. You're at 36% here. I think it's great. Now, my only stipulation here, just based on what I'm looking at, I do think the total trades can be fairly low for the year of 2024, but it typically can be related to pairs. For example, we could see he doesn't have all of the trading pairs that we use. So that typically relates to the number of trades, which now kind of breezing through and realizing how little pairs he has in this specific spreadsheet, I think it's no problem. So that's kind of what I do, just to kind of give you guys, a basic perspective of an initial overview. I look at the equity curve, I jump to the win rate. I usually come here and remove that little equal sign that you see because it gives me a realized win rate. Everything to me here looks fantastic. So without further ado, I will dive into some trades here. I'm going to take very few in this specific spreadsheet because when data looks this good, you don't want to touch it. You don't want to tamper with it. A good mentor can look at some data and understand that, hey, this trader is doing a great job. Any more confusion or input that I throw into their mind right now could hurt them from doing what they have here. The next thing I will say is I would use this spreadsheet as your holy grail when you are on a live account. Exactly how you traded here, exactly the things that you focused on. This is what you should be doing because clearly it worked fantastic. And I also think this mix of aggressive and normal ranges here is perfectly normal, and it happens with all of us, including myself, as well as this mix of equal highs it looks like you have here. I'm sure you're marking these different things to kind of keep track of those minute details we talked about before. But I think the fact that you have a healthy mix of all of them throughout this entire set of testing and the data looks great, I would not worry too much about it. You know, don't let your mind sway too much or stress too much about these little details when the bigger picture shows you are doing fantastically profitable with a mix of all of them. And obviously, just to take a look at a few trades here, just so we can get an idea of how the trades look, I always pop open a few before I go and make any conclusion. I think that's important as well. You can't really base trading off of one-off scenarios. If you open one trade and call it good or bad, then you are not looking at the markets from a probability standpoint as we should be. And I think just right away, based off what I'm looking at here, he has some great trades. They all look great to me. There's nothing that stands out specifically on this set of testing. Overall, these trades look great. So I like the break of structure. I like the bullish trend we're working with here. We have the fair value gap here and a smaller one down here. We tap in, get a break even on this trade, and it runs lower. I think these kinds of trades are perfectly valid. It looks great and the data is awesome. So without further ado, I do want to hop into the second spreadsheet, which is where he mentioned more drawdown. So now taking a look at this spreadsheet, here we have about 70 total wins, 62 total losses, and a lower win rate overall, of course. We will remove that 0 again, and it looks like a lower overall win rate as well. So whatever changed from that initial testing to this one is kind of what we want to nip in the bud and figure out. But also, as I mentioned, this doesn't erase this initial set of testing. I would recommend on your demo account kind of focusing and putting yourself in the mindset of what you did here. And if you were using too much discretion here or too many different concepts or worried about too many little details, that could be what's hurting this set of data. But we will take a look here next at the total number of trades, which looks like 87. And more importantly, I will look at the number of pairs, which to me looks good. It looks like we're working from 2023 to 2025 here from a timeline. So a couple years on a couple pairs. So just kind of a brief overview, I would say it looks like he's taking about the same amount of trades because obviously he's trading 3 years for each pair at this point. Now, like I mentioned, this is me looking over this spreadsheet for the very first time, no rehearsal, no going over the numbers. And I previously mentioned an issue that it could be is the details, but one thing I'm noticing very, very quickly, he is trading only AUD pairs, AUD NZD, JPY, Chef, and CAD. He's trading only those pairs on a few set of years. Now, the issue with this is, number one, these pairs are highly, highly correlated. If you're doing bad on AUD pairs, it's very likely that you can just genuinely have a worse win rate over the course of these pairs on these types of years. Now, does that mean that we're not profitable? Of course not. We could still see a 13% gain here, just a deeper bit of drawdown. So yes, we are still profitable on the AUD pairs, but keep in mind they could have a lower overall win rate, especially with all of them being correlated and all of them being traded on separate years. So to me, I would honestly say there's not much concern here regarding the differences. I would not let this sway your confidence because the one thing I want you to understand is that this strategy does not work on a pair-by-pair basis. It's very likely you can have AUD CAD be negative for 3 years in a row, but it's the fact that we have over 20 pairs on our watch list that allow us to accumulate that data in the course of a year. So one thing we do recommend to our students is to avoid kind of testing in this fashion where you have a lot of highly correlated pairs over 3 years. And my recommendation is test essentially what you did here, but a lot more pairs in 1 year, because this is going to give you more accurately what the data should look like over the course of a year, because that's how it's actually going to pan out on a demo account if you're following. So without doing that, this isn't exactly how your data would pan out because, you know, let's just throw a couple example pairs, Euro JPY, Euro USD, and Euro AUD. If you added these pairs into these 3 years of data, you may find that they could have performed much better than your AUD pairs and over time kind of increase that equity curve and kind of drag that win rate up. So that would be my first thing. I would not let this specific sheet that I'm looking at waver your confidence in any way. I just want you to understand that you may need to view this data a little bit differently. So although you see it's in deeper drawdown, keep in mind, I don't think it's anything specific to do with the trades. I think it's more specifically the testing approach that you took here that's different. And last but not least, let's take a little look at this private accounts demo here. For some reason, I can't edit this one, which is fine, but kind of similar to what we talked about before. I did mention that I assume the demo account is better than both of them. So I think he is doing a great job with repetitions here. I think he's doing a great job overall with the number of trades, the win rate, everything looks good to me. And as we can see, the demo account is performing much better. And it's usually because you have a little bit more of that downtime between trades. As you know, in the 4-hour time frame, you're not necessarily going to be on a chart for an hour or more a day like you will in backtesting. It allows you to focus a lot more each individual day. It allows you to collect your thoughts and emotions. So it's very, very different than backtesting typically is, and it's less overwhelming, and I typically find that leads to better data with my students overall. Now, the first thing to look at here is that win rate, which, of course, fantastic once again, of 56.5%, 26 wins, 20 total losses, and as you guys know, I like to remove this little equal sign here, and once again, fantastic on that win rate there, so 35.4%, 20 total losses, 11 total wins for an overall gain of 13%. This data looks great to me, and it looks like we're just looking at the course of 2 months here. So in the course of 2 months, he's had a bunch of repetitions, but as I mentioned before, the trader who can continue to take more and more repetitions in a live market will perform significantly better than the trader who's picking and choosing trades. That is how trading is meant to be. You're supposed to follow that simple strategy, place every trade that follows those orders that you're seeing, and of course, don't sit and pick and choose A+ setups because this will hurt your repetitions and overall take your equity curve and your edge longer to play out. I think the key here is it seems like he likes to mark equal highs. I think from what I'm seeing, you clearly have a healthy distribution of equal highs versus not, and that was one of the things you questioned. I think it's perfectly healthy to have some trades with equal highs resting in there. My AUD chef trade this week, fairly, let me move this little dot here, but you know, to me, fairly equal highs. As you can see, the break-even rule kind of comes into play here, and I ended up getting that break-even level. So no harm, no foul. I think it's perfectly fine to have a healthy distribution of equal highs here and there. If it's something that you do find significantly hurting your data over long-term repetitions, then feel free to remove it. And as you can see here, a little bit of deeper drawdown at the beginning of the year. You know, he started right away with about 6 losses here, and it can be tough for someone mentally to kind of withstand that. But then, as you can see, as a few more trades went on here, he accumulated more wins, wiping out all of those losses there, and that's kind of how the edge is meant to work. And over the long run, you can see that 13% total gain. So we can visualize some of these drawdowns in the equity curve here, and then very quickly kind of see how he breaks out of them with win streaks. And of course, 2 wins in a row, 2 wins, 3 wins in a row. These are huge to the equity curve and especially your confidence. When you see 3 wins in a row, it is huge for the mental to see a large losing streak and then some wins come and wipe that out. It really helps the trader get into that probabilistic mindset. And I think these trades look great. Just based on the data already, I can see that a lot of them are trades that I personally took on my own account anyways. So, you know, we're kind of already trading very similar. Yeah, so I actually believe I took that exact trade there as well. And I'll look at some more winning trades here just to get an idea of, I think I actually took this one as well, and we'll take a look at this one. So yeah, this is a great trade. I did not take this one personally. I know a bunch of our students did. I missed it. I won't let this drag on too long. I think my biggest personal takeaways from what I'm looking at here is number 1, be confident in yourself and your data because this is absolutely fantastic. You have a great win rate, great amount of repetitions. I would say personally, you're doing every single thing right, which of course, you know, for someone who's looking for answers on certain questions, it may not be something you want to hear, but in some cases for traders, it's something they need to hear because if you have a great win rate, great returns, a few months here with 13% gain, your only concern that you came to me with was kind of those very discretionary details. As we talked about, the size of the range, when you should cancel the order, and for example, if there was a big break of structure, not knowing which range to use. Keep in mind that these discretionary details are healthy and normal. I sometimes have big and small ranges in my trades. I don't have specific rules myself on how I cancel orders, and I also don't really focus too much on the more aggressive breaks or smaller or bigger ranges, depending on the break of structure. I think it's something that you should leave on the back burner and do what you continue to do and make good returns here, because these expanded questions are kind of discretion in psychology working its way into your trading plan. And realistically speaking, all of those things you mentioned are embedded into these trades you see here. I'm sure there's small and large ranges within these trades. I'm sure there's some where you're not quite sure based on the break of structure if you should take the more aggressive or conservative trade. And I'm sure if you didn't have a set rule for when you should cancel orders in here, but it's working out fantastic, you should kind of keep doing that same thing. That's what I do as well. I don't have any set rules for these types of things. And other than that, I feel your only concern regarding this spreadsheet and the deeper drawdown didn't necessarily have to do with the types of trades you took. It had to do with the method and how you tested. A lot of correlated AUD only pairs on a few years of data, kind of leaving out those other pairs that could come and help increase that win rate and overall data, because that is at the end of the day how this strategy works. I appreciate you submitting it. I hope this video didn't drag on too long. Your data looks great to me, man. Keep doing what you're doing. keep studying, keep back testing, and you're honestly on a great track. This demo account looks amazing. And of course, for any of you subscribers out there who watched all the way to the end of this and want to submit your own data, feel free. You can reach out to me on Discord. My username is jblazdell729. You can find it right here. If you shoot me a message and send me some data, or even just, want to talk to me and ask some questions, I will go over it. I will answer. I get to every single DM I have. I appreciate the active subscribers as well who come and share their data with me and ask me questions. Thank you all for watching. I hope you gained some insight from this, and I'll see you guys in next week's video.